What's up, you guys? It's Matt here. I ran into an interesting article today that I wanted to talk about, right? The title was that AMC could run out of cash. And this is an interesting topic because people are asking me like what's your opinion on what will happen with AMC, right? Because it's been a while since they've actually turned a profit. So do you feel like AMC is not going to have as much success or that it will fail and then the hedge funds will ultimately win? And I wanted to talk about this, go through this article a little bit, and then give you my opinion on where I see this, right? So, guys, hit that like button, hit that subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter, follow me on Patreon, those links should also be in the description. But this is definitely an interesting topic because we know of the stock market and, you know, investors into it care a lot about what the financials are doing, what the financials of the business are. Because if the business cannot maintain, their expenses, cannot maintain operations because they're running at a loss consistently, no matter what they end up doing, that's not a good thing. Right? It's not a good thing for anybody invested into the business. It's not a good thing for anybody that works for the business. It's not a good thing for anybody that's in charge of operations. Because if you're not turning a profit, you can't pay all the people that are involved, and then you start skimping in certain areas, or you just are at a loss, and eventually it goes way against you, and it comes in the form of bankruptcy, right? Or the business just fails. And obviously, I don't want that for AMC because if it gets to that point where financials look horrible, you can't turn a profit and the business does end up failing, who wins in the deal, right? Hedge funds win because they're the ones shorting the hell out of this thing. Um, and we are the ones that kind of allow them to continue to do what they're doing, right? Because if they continue as planned and we don't allow AMC to have any type of capital, um, then we lose, right? We lose everything that we invested. The investors that are investing into AMC lose everything, as well as the people that work, as well as the people that lead. And honestly, we can provide them with that, but if we have provided, the leaders with something like that, with funds in the past, and they have not done the right things with those funds to lead it into success rather than into failure, um, then why would we trust to do it again, right? And why would we want to dilute our overall position? So that's where we stand right now, where you have the ruling, or what came about, the conversion and all that stuff. So let's talk about that, guys. Hit the like button, hit that subscribe button. But let's go ahead and dive into this really quick. So as you saw with AMC, it's currently down about 13% today. It's at about $5.08, down 77 cents today, with 53 million shares worth of volume, which is definitely higher than what we see on average. So things are not really looking good for AMC. It is higher than where it was at a $4 plus level. Seeing it at $5 is still good, but we could have seen this at $8 where it was previously, right? It was at $8. So, anyways, let's go into this article really quick, which I have pinned, right, where it talks about AMC Entertainment could run out of cash. The CEO says after court ruling urges stockholders to take bankruptcy risk off the table, even as shares surge. So CEO Adam Aaron said a court ruling last week to make it harder for AMC Entertainment to raise cash has serious implications for the circuit's financial stability. A blow, wait, a blowout. Quote, Barmenheimer weekend at the box office and surging shares price notwithstanding. AMC must be in a position to raise equity capital. I repeat, to protect AMC shareholder value over the long term. We must be able to raise equity capital. Um, he wrote in an open letter to shareholders on Twitter, which was just renamed X. This is especially the case now with the added uncertainty caused by the writers and actor strikes, which could delay the release of movies currently scheduled for 2024 and 2025. Um, as things stand, he said, the risk materially increases of AMC's conceivably running out of cash in 2024 or 2025, or of AMC being unable to satisfactorily refinance and stretch out. Sorry, my eye itches. Um, and to stretch out the maturity of some of our debts as it comes due starting next year. The risk of financial collapse in is not whimsical, he warned. Um, Noting that Regal parent Cineworld shareholders were wiped out in the chain's bankruptcy. The background, the background, AMC's army of vocal retail investors, which saved the chain from Chapter 11 during COVID, have balked at authorizing the company to issue new shares, since that would dilute their holdings. That is why Aaron created AMC preferred equity units, which the company could issue and sell instead of common shares without authorization. But the price of apes fell, making them less effective for fundraising. And so did the price of AMC. It was like, people were diluting their position, or they were selling their position of ape, which I sold my position of ape because I wanted to get more AMC or hold more AMC, and that's what I ended up doing. And obviously, I did it before it dropped down to the price value that it's at right now. So shareholders voted in March to back the company's proposal to do away with apes converting them to common shares, and finally allowed AMC to sell shares. But some stockholders sued in Delaware to block the conversion. They agreed to settle with AMC shortly after, but the settlement came under the purview of the same judge who refused to approve it. Aaron acknowledged the dilution concern, but said it's more important to put ourselves in a position to raise equity capital. That is what I can't really see it 100%. That is what will make it more likely at first. We survive, and then that we thrive. In my view, the wisest way to defeat that short thesis is to take bankruptcy off the table, uh, to the extent possible. And we do that with AMC being able to raise equity if, as and when needed. So, honestly, just thinking about the fact that AMC could run out of cash, and I really couldn't see like any of that, nor did I feel like I understood it. No, I understood it. Anyways, what we get from all of this with Adam Aaron basically saying like, hey, we could run out of cash. We need to raise cash. We need to find a way to give him that line to raise capital, because if you don't have enough money to pay for expenses or anything like that, that brings in bankruptcy into the table, which you don't want to see, right? You don't want to see at all. And you don't want to see investors struggle because of that. Because what hedge funds are waiting for is they're just like, well, if the business is not thriving, if the business is not making enough money, right, then ultimately all you have to do is wait. You can see, and it's not just wait, right? They'll continue to short, but all they have to do is wait. And if they just continue to wait, then all of this will collapse and they will end up winning out of the deal, whatever they're looking to win. I'm sure they already have found a way to make up the money or some money that has been lost there. But even if, um, they didn't, you still would have the ability to win by just waiting. And that's what I've been saying since the beginning, is that they're going to play the time factor. They're going to play the time game. And if we wait too long, if we allow the business to fail from just simple business perspective, where you're like revenue that you're bringing in, expenses that you're paying out, if it just doesn't line up and expenses are way higher, then obviously you fail in the end. That's just how it goes. So, anyways, let me know what you think about this. I apologize for taking forever with this damn article, because it was only like, it was only like 5 paragraphs or something, but for some reason, I'm I'm tired of looking at a screen today, I guess. This is the last video that I'm recording, so hopefully you guys enjoyed the video. And if you had to skip past a lot of the reading, then that's fine. Um, but just ultimately, I feel like maybe cash needs to be raised, that they need to have the ability to, um, push out debts or pay off some debts, or, just do something that will help the business out overall. And I don't know, I honestly don't know what that is right now. Um, but from what I understanding, raising capital is probably the best bet, and whatever they can use that for would be great. So, I'm gonna get out of here, guys. Thank you so much for watching, and I'll catch you in the next video.